Hi everyone. Today is Friday. It is August the 23rd. It is also an options expiration week, though not a significant one by any means. What we do have is Jerome Powell coming to speak today from Jackson Hole, and yesterday we had a very substantial bearish engulfing candlestick. Now here's the thing. Bearish engulfing candlesticks, such as the one to the left or the one to the right here, they do tend to matter. So what we want to do is watch to see what happens as we come up here. Now, as you know, I have said, hey, listen, we're in a buy the dip formation. And true to form, though the dip was very savage, the market is holding on today. And we can look at these wicks and this area around 556 as the floor that it should hold. Now, you also know that I believe that we're going to chop around this area for the rest of the year. Fill in a volume profile and just be very, very noisy. We could even drop to this edge. Sorry, that's me clanking around in my office. Very sorry. Way down here at 535. But no crash seen. It's just a space where you go, wow, that's a bearish engulfing candlestick. I need to see what happens today. Fridays are normally bullish, and very interestingly, Thursdays and Fridays tend to expand well over the average ATR, and they did. So what are we looking for today? Still buy the dip. Here's the thing. How'd you know yesterday that you needed to stop buying the dip? My answer is always the same. Take a look at the candle in motion, 2 to 3 candles to the left, and think to yourself, okay, if I'm not above the close of this candlestick, the next place I'm going to hit is the open of the prior candlestick. And if I lose the heavy congestion support at this 560 area, around and about 560, 561, I am very likely to have much more downside pressure. Now, interestingly, I don't want to get super nerdy over this sort of stuff, but that area ends up being 50% of the overall candlestick formation. So you literally could draw a box and say, uh-oh, here is all of the stuff that I just traversed. If I lose it, I'm headed to the bottom of the other box. It's just a standard extension of price, and that's exactly what we did. That's exactly what we did. And so just remember, it's buy the dip, and if you can hold it, you're in great shape. But you don't want to stay in a trade where clearly trend is against you. Sometimes we can get very stubborn, and then we have to sell when we have to sell, not when we want to sell. So, long diatribe, that's what we're looking at, bearish engulfing across the space. If we lose the low of the current candlestick in motion, this is the morning candlestick, that's about 558, we should have ourselves a little bit of trouble for more downside pressure. Okay, so right now, because this is a very substantial bearish engulfing, and it is on the daily, if you buy, it is best to take your profit at the highs. And that's going to be the high of the candlestick body. So that's going to be somewhere around 561. I do not expect range expansion today. Here's where I'll be wrong. It'll move over that level. You don't want to short up here unless you've got a shorting formation. How does that look? You get way up there, you pull back, and you start losing the majority of the bodies of the candlesticks to the left of you. Okay? That's the only way you know. Okay, let's go to the ES. Same thing, bearish engulfing candlestick. Same sort of measurement. How do you know you're in trouble, right? Close of this candlestick, open of that candlestick, close of that candlestick. This range right about here. And again, you can draw yourself a little box and go, uh-oh, if that's my box and I lose it, I'm likely to extend by 2, right? The same amount. Same sort of thing. Very napkin what do they call it? Napkin calculations, back at the napkin calculations. But it does sort of tell you that. And your eyeballs tell you, well, this looks like the next line in the sand if I lose it. And so that's really, we have to look from a common sense perspective and go, can I afford to be long here, or do I just get out, take my lumps, and go, I gotta wait until this thing settles down. Where's it going to settle down at? You can take the risk at old resistance, new support, because the risk is very tight, and the likelihood in an upside trend after reverting to the mean that it's going to bounce is sitting there is very, very high. Okay, so we're now at 50% retracement, almost 61.8% retracement in the ES. Top edges 56.65, bottom edge 55.97. I actually love that number. If that number holds, we're in good shape for either sideways or upside pressure. All right, let's take a look at the NQ. Also bearish engulfing, also reversion to the mean. Coming into this 8 EMA, I had the 14. I wanted to see where it would come in. A bearish engulfing candlestick can often mean future bearish motion. So if you're buying the dip, you have to watch for resistance to come in at around that 19,000 area, 19,920. That is the point of control. If you were with me on fast markets yesterday, I did short the 20,000 area. I just didn't hold it long enough because I'm a wimp and I could have held it. And that is a lesson to me to sort of think through those things once the topping formation holds and everything else is in play. All right, that being said, floor today looks like about 19,608. If we lose that zone, we got some probs, right? Maybe 612. All right, and then here's a low volume node all the way down at 19,352. We could clone this and then put it here, and then, we could leave it like that. We could leave it like that. That would be the 1-to-1. If this candlestick expands and they're using it as a Fibonacci, it's going to walk down these steps, and we can see price congestion confirming at about the 430-ish area. And I don't know, again, somewhere around this noise, this area around 19,291. And then, of course, the VWAP for this whole entire formation is what we're staring down. Interestingly, this very big, let's hide these, collapse. This very big wave is retracing it's 618, right? And so this could be a pretty interesting area that provides a fair bit more downside. Hard to say, though. Very, very hard to say. I think it gets a little sideways here. So buy the dip, sell the bounce is what I am suggesting. Sorry about my throat. I don't know if I already did this. Did I? Qs, bearish engulfing. The floor today looks like about 477. Pullbacks are buy zones, but if we can't get above this 481 area, look at all this heavy congestion, people are going to try and sell that. If they sell it and we lose the 477, 475 to 473, next line in the sand. Let's take a look at the YM. Same bullish engulfing. This trend line is pretty important. I'm going to move these guys down here. I'm going to also clone that fib and then bring it to the bottom so we can see what the 1-to-1 retracement looks like, if indeed that happens. It actually tends to correspond with price action. So that is very, very interesting for us to keep our eyeballs on. Okay? So that being said, there's a very thin volume profile down there, very thin volume node at around 40,200, and then value area high, 40,100. We are clearly 900 points away from that, And so sideways action. Look at the bounce. It's been very big. But every single spike above has been sold. So this, to me, friends, is one of the best shorting areas at the high that we can see in the entire chart. Now, when do we know we're wrong? We're going to break above the high of the prior day, and we're going to stay there. But if we break above that high and we begin to collapse, and then we lose 41,102, that's going to be a short. Now, it's a short in a counter trend trade of bullish motion, so you want to watch that pullback event to see, hey, can I hold heavy congestion at 40,900? If I can, then I'm going to go up. If I can't, I'm going to step down into 40,800. And then, you know, this edge right here, right about the open and the close, there's no real gap up in the YM that we see in the NQs or the ES. So that's it. 40,839. That looks like a sweet spot. I'm going to focus on there today in my own future space, and I will see you on the Zoom midday Moneyball report for the Benzinga Pro platform. And stay frosty. Going to be a very interesting day.